Please subscribe, like, and hit that notification bell. Thanks, guys. All right, guys. It's been a little while. Look, this is a chart I've been working on. Haven't posted anywhere yet. There's always weight of evidence to collect data points, collect evidence. So while you could have a chart on a time frame with identified trend lines to give the bullish case to see, okay, here's a support. If it bounces off that, then you could expect to move up, or you could draw some resistance, and then you see that if it breaks above that resistance line, then you have the probabilities of having a meaningful move up are more probable. That you have to collect all that. So if on the time frame it looks bearish, on a higher time frame it looks bullish, then measured versus another asset class it looks bearish and then bullish, and then on the time frame and with different indicators, and add that, it's a multiplier. You multiply all that. But once you have a huge base of data points, and then you have probabilities that you could attach to the next possible move, every time there's a new data point, you take it in, you analyze it, and then you weigh it appropriately and compile it with all the other data points you have. So there isn't just one chart, guys, that rules them all. There are some charts that have more weight because on the higher time frames and the cleaner, longer trend line breaks, etc., horizontal, like all that stuff that we could attribute probabilities to. That's how chart trading works, guys. It's not one chart does all. So that being said, this chart is pretty important. So what you have here, guys, the black line, and I made on purpose here before, I'm going to go through time. This should be a short podcast. I'll go through time and I'll show you how this evolved. This data series starts in 1913. So really, like, I think that's when the Fed came into existence, but that's where the data series starts, where the little dinosaurs. The black line is the Dow Jones Industrial Average divided by the Producer Price Index. So Producer Price Index, it looks a lot like the oil chart. It's cumulative costs of producers to create the products that you buy. That's the black line here, the Dow Jones divided by that. So if the Dow Jones is able to outperform the PPI, I'll show you the impacts of that. And for this case, I'm just going to use silver because that silver chart was not pegged like gold prior to 1970. It's floating. You could see the impacts of the Producer Price Index or the Dow Jones breaking down versus the Producer Price Index, and that how that interacts, how silver reacts to that. At the bottom here, so notice always when you look at a chart, here's the monthly chart. Always look at that. Look at the scale. Make sure, so it's log scale for my silver chart, log scale for my Dow Jones divided by PPI. Look, man, silver, man, it was like 55 cents back in the days. Pretty impressive. And I have the MACD. So just one indicator, and that's going to give us some clues. And you'll see by the end of this podcast, it should really crystallize what's happening right now. All right, so MACD is trending upwards nicely, goes above zero. So this MACD of the Dow Jones divided by PPI, it's right here. Trending upwards, we have the PPI underperforming Dow Jones all the way up to the 1929 in the top. Sharp fall down. 1, 2, 3, valid trend line break. But I'll bring your attention here. Look at the zero line. Look at the wires, the MACD wires. Once they cross the zero line, the dynamic has changed. When people say silver, yes, I'll go down if US equities, fine. It doesn't always, but I'll show you what silver really likes. So silver does go down with the US equities, goes down, goes down, goes down, goes down, goes down. Look here at the bottom. Here's silver bottoming at 28 cents an ounce. Look what happens when the MACD turns up. So this is the MACD for the Dow Jones. So this is telling you the Dow Jones is starting to outperform Producer Price Index, which you say, oh my goodness, so nominally The Dow Jones is probably looking much better than here, because here, remember, it's adjusted for the PPI, so it subdues its headwinds on that chart. But look at silver. I just dragged silver down here just to show you in the bottom pane. Maybe you want a different color. I could put, okay, here, I'll put it black here on the bottom pane. Or maybe I could have kept it orange. But here it is. Here's silver going up with US equities. It doesn't always do that. Here, US equities went up, but silver went down. Why is silver now going up with US equities? Silver is a recovery metal. It loves US equities, and that's when you really zoom out. 70s, there were some periods where US equities just went down and silver refused to go down and just went up. But silver likes the pricing of destruction of purchasing power. And I'm not going to show that chart today, but I have other charts where the destruction of purchasing power was huge here. Silver loves that. So whatever they need to lower rates, to print money, to keep afloat the anomaly, the US indice versus producer price index, to try to keep it afloat, silver prices that in. And all these are bear market rallies. So silver up, correction, up. And you see the MACD, while it's peeking its head up above, it's not really trending upwards. It's going to start forming a trend line soon. And here is trend line and MACD. US equities now you'll see up here, they are breaking out. And this is the Nifty 50s. The Nifty 50 in the mid 50s all the way to late 60s was a huge bull run for US equities. And then silver flatlines. Well, that happens, and you see now the MACD, it's coming back to test. Even here, it came back to test, refused to go below zero line, or barely, not both wires, move up. Hogs above, and up goes US equities versus producer price index until, I drag back my silver on the other pane. Until here, MACD 1, 2, 3 breaks down, convincing breakdown, retest from below. So that trend line now is morphed into existence, and now it drops. We're back here where I circled this, 1966. We're back kind of like in 1930 right here. Once the MACD crosses below the zero line, a lot of damage has been done to the momentum. So it's just not about a trend line break here. Sometimes I could have had, there's many trendline breaks along the way with backtest higher, but with the MACD really dropping, here maybe it's another one, I could have stretched that, and backtesting and moving back down, look where silver started. That was a huge bottom for silver, explodes, corrects, explodes. On each of these rallies, I'll bring it back down here. Look at this. Where is my silver price here? US equities recover, the MACD, silver goes up. Drag that down. US equities recover, refuse to go back down, silver goes up, up, until US equities go back above the zero line, the MACD. Here, even here, there's a trend line break. There's probably a more aggressive one right here. Here, 1, 2, 3, goes back up, retest from above, refuse to go down, and that's it for silver. Silver has headwinds from there on out, breaks above, can't get back above, and down she goes. Look at that, the MACD. Look at the outperformance for US equities versus PPI. All the 80s, all the 90s. Look at the MACD in 95. Look, I have a case where I have some charts that there is a possible analog move that were in 1995 on that one chart. But then when you look at other charts like this, I'll show you right after this, you'll see how it looks today. The MACD refused to go down. It was still positive. 1, 2, it was bouncing, morphing that rising trend line to existence. And then here it made a decision. 1, 2, 3, or here, even a breakout upwards, very bullish. Silver just goes sideways while the US equities just rocket upwards. All right. So what happened here? 2001, break, the MACD dropping below zero line. So it's at the same time, it was still above that rising trend line here, but there was a wake up line here that was faltering. The more acute the trend line, there's still energy going up. So you're running up hills, you trip a little bit, but you could still go up, right? But after that, as the hill flattens, you just stop. Back below zero line. So now this is the same situation we had back in 1931, back in 1966. Below zero, I'll zoom in here, below zero, back test, refuse to go back up. This is critical. So now it's really in a downtrend. And by that time, once MACD continues back down 2002, now it's below 1, 2, 3, 4. Now it's below the trend line. So MACD was giving us clues on that failed retest that something was wrong and it just decided to go down. So what is the impact for silver here? And a little bit more than the 1970s, this is more like the 1930s, really more in tune with the recoveries for the Dow Jones versus Producer Price Index versus inflation. Bear market rallies for US equities versus inflation, proxy being Producer Price Index. Silver loves it. Look at that, just goes bonkers. It tracks the MACD, front runs it, it loves it, just loves it. Goes up. People think it's a recovery for US equities, but you got to be careful. If silver's going up that much with the MACD of the Dow versus Producer Price Index, you're not in a bull run yet for US equities versus inflation. Silver's telling you that money capital flows are still heading severely into silver. So this is considered bear market rally, just like these peaks, these little pops above in the 1970s, try to get back above. Silver's telling you a different story. Just like these pops above, silver's telling you a different story. US equities get a rug pull, silver drops. Look at that, on the recovery, silver drastically goes up, while MACD showing that the Dow is having difficulty outpacing Producer Price Index. Silver's just loving it until, and look at this, guys, once again. Here is a breakout line. Here is, look at the MACD creating a nice, could be here. I could probably even stretch it. Above zero, retest the zero line, and off it goes. And look at silver, big, huge topping pattern, just like in 1980s, and down she goes. So yes, you could do TA on the actual silver chart, but analyzing the MACD gives you some clues if the producer price, if the Dow Jones is just doing a bear market rally versus inflation. Look at that, MACD rocking upwards, just like you want to see in the bull era. Look, in the 1980s, never went back down below zero. 1982 breakout all the way to 2001. Beautiful bull run, 2011, all the way to 2022. Beautiful rising trend line, 1, 2, 3, breakdown. So this looks a lot like this congestion area here, right? The Dow is trying to go up. Nominally, it might be higher. It's going up, going up. It could turn sideways, could go all the way up here. But the MACD did a hard turn from a bull run back below the zero line. So right now, the recovery, and I'll show you the silver chart right here. Look at that. Let me zoom in. Look at silver doing a V shape before the MACD recovers. It senses when everybody's thinking recession, there might backfill a recession here. Look how silver recovered, is recovering with the MACD of the Dow Jones. It just loves recoveries. It loves pricing in that destruction of purchasing power required to save the US equities. And the silver chart itself is not that bad, guys. Like if I do a 1, 2, 3, look, this is morphing this line to existence. Close above here, it's not looking bearish at all. Bearish, the price would be going down, testing breakdown lines. It's not doing that at all. It's hogging, testing a breakout. But you also have it, guys, with a recovery in US equities. So while I'm just going to find my squiggly line. It's almost done, guys. While this is recovering, this probably a back test here. Silver is going to love this. It's probably going to track that recovery just like it did back in the 2000s, like it did in the 70s or the 1930s. It just loves it. So there you have it. You're in a bear market for the Dow Jones versus inflation, or using the producer price index as a proxy for that, as defined by the MACD, and also, yes, clean trend line breaks. And the impacts of silver, as I've shown you, is that silver loves to track the recovery, those recoveries as they go up and down. The MACD recovers, you like it. So this is fuel. You want the Dow Jones to the MACD to gain versus the PPI. As long as silver is going up, it's telling you that it's bear market rallies and rug pulls are possible for US equities, but silver just loves thriving and goes upwards in those eras. So that's it, guys. Hopefully that helps you spot where the scales are leaning. All right, guys. Take care. Ciao. Please subscribe, like, and hit that notification bell. Thanks, guys.